Okay, so picking up where we left off yesterday, as I mentioned previously, credit discount makes things a pain in the ass that doubles your suffering as an accountant. But that's not the only thing that it brings about. Like, let's say there's a discount at your favorite shoes shop or something. I don't know why you're trying to buy shoes, but anyway, they got a 20% off. It's $200 or $100. Okay, let's go with $100 to make it easier. So you don't count the discount on a trade discount. Like, you just treat it as non-existent, and if it's $80 after a discount, then that's it. You don't count the discount. It's only the net price that you're after. But then there's this damn thing, cash discount. You know how, like, when you're shopping and the guy behind the counter asks if you want a note or not, a receipt, and you say no, or if they ask you to pay with cash if possible, and if you do, they give you a discount for some reason. Yeah, that's basically it. Cash discount. But, like, the thing is, let's say they give you a discount if you pay within like 1 month or something. And the problem is you don't know if you're gonna pay that, if you can manage to pay it all off in a month. So you leave it unclarified, just put it as put it up, the listing price as, an expense. But if you manage to pay it off within that month, you are gonna shave off from that expense. That congratulations, you just saved yourself money and doubled the suffering as an accountant. I don't know if it was worth it, but anyway. And besides that, we got two kinds of accountings: management accounting and financial accountings. You will need both if you want to run a successful business. Management accounting is exactly what it says: management. Like, you know how when you're in a meeting, there's this guy who's talking about the business future. Like, you don't really care, but all your bosses seem to love him. Did you ever wonder why? Because he's the guy in charge of it. He, looks at all the trends and studies whatever product your company has, and it's like, we should probably invest in these. I mean, we got data from the previous year. It's gonna boom. We are gonna make so much money. So every single CEO and boss, if the management accounting guy is confident, loves him. Then the financial accounting, the blue collar guy, he's the one, bookkeeping everything and keeping all and writing all the ledgers. You go to him if you need the records. Basically, all the tax collectors, all the investors, they talk to him. They talk to this guy. They bother him. Why does he have to do social interacting? He didn't sign up for this. Finally, let's go into what happens when you make a transaction in businesses. First, we got invoices, but the thing with large companies is that, you know, they try to appear like they're cultured or polite, but, polite people just don't come up to you and ask for your money. So basically, an invoice is their way of saying, okay, I did this, so can you give me back my money? I need this payment. I need this money. A polite way of asking for money from companies. Congratulations, I don't know why you have it, even though you're a normal human and not a business. And then there's remittance advice. Basically, a polite way of asking or confirming details, in case they make a mistake later and transfer it to the wrong account, you can blame it on the remittance advice and get away with it. And after that, it usually just, comes with the payment. And remittance advice also is a kind of way of asking for a receipt. Hey, I paid you guys, so give me my receipt. I want proof that I paid you. And that proof is the receipt. Simple explanation, I'm sure you all have it. Also, there's debit note. Basically, companies are asking for a refund. And if the one getting asked for a refund doesn't like it, he'll refuse to give the credit note. The credit note is the refund, and the debit note is the note asking for a refund. It doesn't always go this smoothly. Uh, there will be a lot of friction because they don't want to give the refund. So good luck with that if you ever have to send a debit note. Finally, there's the statement. Basically, if you have like multiple invoices because you still haven't paid everything, then the company is like, okay, here's our statement. It's basically a bank statement except for businesses. No, a statement saying, okay, you paid this much, but there's still like a million different things you still need to pay, so pay off. A statement basically stating that. Inquiry is self-explanatory. You inquire, like a business goes up to 3 different businesses, inquires about prices, the conditions, yeah, everything. And quotation is the company's response. Okay, let's say for some reason a company has 5,000 chairs. They are trying to sell those chairs, and suddenly an inquiry comes in, a guy or a company trying to buy 1,000 chairs. So the quotation is basically them trying to, warm their way in, like use their solar tongues to convince you to buy maybe 1,000 more chairs. Double it. I mean, we got everything. We got cheap chairs. They're affordable. They're great. We can even, go and put it there, whatever you want. We can be your servants as long as you buy all these chairs. As long as you get it out of my sight. Basically, it's that. Finally, purchase order. It's basically putting in your order and saying that, okay, we got your quotation successfully convinced me, so we'll buy up. So these are all the languages business uses, or all their names, I guess. These are 2 different accounting positions. These are discounts. One is just non-existent. You can treat it as non-existent because most of the time they are. And there's this guy who is a pain in the ass that doubles your suffering, like the same as this. Why do they double suffering? Why are there 2 more double entries? Why? Yeah,
Mm,
that's pretty much it.
thank you. That was the pretty uh, s- uh, good explanation of what we've learned today. Thank
Yeah.
you, Vaira. Thank you. So, see you tomorrow then.
Yeah. See you tomorrow. Bye.
Okay, bye.